Hey, what's going on, everyone? Today is March 23rd, 2023. We're going to talk about SoFi today because I'm thinking that people may wonder, why did SoFi trade higher yesterday? Now, you guys can see that it ended the day down 0.18%, but it traded as high as $6 yesterday. Why would that be the case? Is it because SoFi is offering access of up to $2 million in FDIC insurance? What is that a good thing or is that a bad thing? Let's talk about it. So now, to those who don't know, the FDIC is the Federal Deposit Insurance Corporation. It is a United States government corporation supplying deposit insurance to depositors in American commercial banks and saving banks. Now, it was created in 1933 and acted during the Great Depression to restore trust in the American banking system. Okay, cool. So why would SoFi increase the current limit, which is $250,000, to $2 million? Why? Because they're trying to keep trust in the bank. Now, how could they possibly create a program from increasing the FDIC insurance from $250 to $2 million? How? Well, take a look. SoFi Checking and Saving is available to offer additional FDIC insurance through the SoFi FDIC Insurance Network. Think about it. So we got access and network. A newly created partnership, that's a third word. So we got access, network, partnership with multiple banks, designed to provide the best benefits to SoFi members. All SoFi Checking and Savings members will be eligible to increase their FDIC insurance coverage by allowing SoFi, to seamlessly place their deposits, i.e. your money, beyond the standard insurance coverage with specifically identified FDIC insured partner banks. So check this out. This is just a marketing ploy for SoFi. What they're going to do is, let's say you have $500,000, right? And we already know that the FDIC is only going to insure $250,000 of that money, right? Rather than you taking the other $250 and putting it in another bank, you're simply letting SoFi do it for you, so that you can keep your business with SoFi rather than taking your $250 to another bank. So they created a network of banks, and they're going to shuffle your money that's over $250,000 and put in another bank account that's at a totally different bank that's within their network. That is just a marketing ploy, because you could do that on your own. They're trying to keep your business. They're trying to insinuate that this new access of up to $2 million is something brand new, something unique, and it's not. They're simply going to take your money that you could do for yourself and put it in a bank that they're a partner with. But the problem is not with moving the money. The problem is, will your money be available? Will the FDIC insure the other $250,000 like they did for Silicon Valley Bank? They backstop all of the deposits. So it didn't even matter if you were to take that other $250,000 out of $500,000 and move it to another bank, because the FDIC insured all of it. So if you had $1 million in the bank at SoFi, you're covered. You don't have to move the money to another bank. So what's the purpose of having a partner of banks to where they're going to shift and maneuver funds all over the place in different accounts? The problem is going to come in, if I want the money, can I get it? The SoFi FDIC Insurance Network is a network of partner banks that allows SoFi to offer additional insurance seamlessly. That allows simply means that you're giving them the ability to take your money and move it somewhere else. That's it. The network will functionally allow members the benefits of multiple accounts by offering enhanced insurance while providing uninterrupted access to all their funds within SoFi Checking and Savings. Uninterrupted. I question that. Now, This is the asterisk of this first area right here. Okay. You guys can see that right there. Access up to $2 million of FDIC insurance. Funds participating in the SoFi FDIC insurance network are deposited into deposit accounts at participating banks. So you're just going to move my money from your account, SoFi, to, let's say, JP Morgan is in this network. That's all they're doing, which are insured by the Federal Deposit Insurance Corporation for up to $250,000. Like I said, if you got $500,000 in SoFi's bank, they're just going to take the other $250,000 and put it at JP Morgan to make sure that you're still covered under the FDIC insurance threshold. That's it. Now, it tells you to review the program terms and conditions carefully before enrolling in the program, and for other important disclosures and information, i.e., you're giving us the ability to take your money and move it. This is what they're trying to say. So if you're going to follow through with this new program, make sure you read the disclosures. All right, so let's get back to this price prediction real quick. I did a price prediction in SoFi on February 22nd, looking for the price to go down. Did an update video right there. So this is where the price in SoFi was trading then, and this is where it is now. So congratulations to those who also predicted the same thing. Now, actually, we're not really getting too much in terms of price action in SoFi. We're still seeing price trade within the trading range. Okay. So that is still the area of contention that we're getting in the market in SoFi. Let's look at this on the 2-day chart. Okay, so currently I'm not looking too bullish or too bearish. I just see a tradable, stable market in between $8 here to $4 as support. Looking at this on the 3-day chart, again, there's nothing here in terms of where I'm seeing price trying to move in SoFi. Given what occurred on this last completed 5 days, right here, and starting the new 5-day price bar, it still tells me that generally the market is a little bit more weaker than it is giving us strength right now. Okay. So what I'm going to do, I'm going to leave this video dry in terms of price prediction and allow the market to give us a little bit more information in terms of where it's trying to go, because I don't see anything on the chart that will substantiate that the buyers has an edge against the sellers or the sellers has an edge against the buyers. And at moments like this is where you're able just to relax, let your mind clear, and let everyone else put in the work to figure out where price is going to go. Okay, so you can see it here though, that I will say in a longer term weekly basis, I want to see the market in SoFi close above $6.20. Seeing that will let me know that buyers definitely have an edge. As right now, we're not there. So just go ahead and give me your thoughts though about this so-called new access of $2 million in FDIC insurance that SoFi is offering with their network of banks. Is that a good thing, bad thing, or is it just all fluff? Let me know. Make sure you maintain the profitability, and as always, trade different.